Hey everybody, welcome in. Today's video is going to be a little bit different. Normally I talk about startup investment deals that I recommend investing in so that you can walk away with a vetted investment option to check out for yourself. But after speaking to my producer James, we apparently aren't hitting certain metrics on this YouTube channel, and so I've been instructed to switch things up. So today I want to go over 3 investment deals that I have passed on and explain to you why I made those decisions. I'm not necessarily fond of this negative content since I'll be hating on these founders' dreams, but James kind of scares me, so let's just do it. These views are just based on my personal investment strategy and preferences, so it's nothing personal, except for you, Craig, you know what you did to me. Anyway, let's get on to it. James, I really don't want to do this, but here are 3 companies that I don't think are good investments at this time. Or are they?
No.
First up is Polycade, a retro video game console with a modern aesthetic. They are currently raising on Seed Invest at a $12.5 million valuation. Their focus is on selling their retro consoles, but their video game platform can actually be installed on your computer as well. Now, I actually work in the gaming category, and so I'm pretty familiar with this space. The gaming space is one I am actively looking for investments in because it is huge, it is growing, and most importantly, people spend money in the gaming space. So back to Polycade. I think by having a modern aesthetic, they are hoping that they can expand their potential customer base. When it comes down to it though, I think the overwhelming portion of their customer base are just going to be adults that want to reminisce and have that nostalgia feeling of playing those old retro video games with a joystick. The price of the consoles is also a barrier to a broader gaming audience. Their cheapest physical model is priced at $1,000. This is twice the amount of the PS5. Any person that's looking to just broadly play video games is likely going to opt for the new Xbox or the new PS5 based solely on price. Now, this is totally fine to have a concentrated user base. I'm a big proponent of the riches and the niches playbook. It's worked for so many other companies, so why not Polycade? And like I said, I've been looking for an investment in the gaming space, but something about this wasn't sitting right with me. Okay, so on one axis we have profit margin, and on the other we have scale, or volume of transactions. There are 2 types of successful companies. If you are a company that has low sales volume, you need to have a hefty profit margin in order to be successful so that each transaction is extremely profitable. An example of this would be Peloton. They don't sell to a ton of people, but their bikes are so expensive that each one makes a lot of money for the company. Now, the other option is if you don't have a high profit margin, to be successful, you need to drive a lot of scale. A ton of mini profits on each transaction really starts to add up and you can be successful that way. So it's kind of just like the inverse of Peloton. An example of this would be McDonald's, who only makes a few dollars or cents on each purchase, but sells 5 zillion fish McNugget patties a day. Now there's actually a third option out there, and that is the most successful company category. It's the category where you are able to drive a lot of sales and also maintain a hefty profit margin. Example of this would be Microsoft, who sells their Office subscription to everybody out there, and it costs them so little to distribute. And so my problem with Polycade is I don't see an outcome where they're driving a high sales volume or a large profit margin. I also think that despite their higher price point, their hardware is going to cost them a lot to build, and it therefore won't be super profitable in itself. Now, they do have another revenue stream through game purchases on their consoles, but after paying developers and other third parties, I don't think they're walking away with a big enough cut to make a difference. So all things considered, I think that would relegate them to this section of the chart where it's very difficult to find success. And so for that reason, I am out. Okay, so that is the first of 3 startup investment deals that I've recently passed on. The next one up is called Nedl. They are currently raising funds on Republic at a $22.5 million valuation. Nedl is a couple of things. They're partially a tool for creators, and they're partially a audio listening platform. For creators, it allows anybody in the world to create a free digital audio broadcast where listeners have the option to call in as if it were a radio show. Creators can generate a link to their broadcast, and listeners don't even need the Nedl app to listen to that broadcast, which is a pretty interesting concept that I'll talk a little bit about more later. As a platform, Nedl allows people to listen to these broadcasts and use their proprietary feature where users can search a keyword, and the company will use AI to pair them with a broadcast that is talking about that topic in real time. For example, someone may want to learn about wellness and searches for that keyword. Nedl's AI will then sift through all the broadcast streams and find broadcasters that are talking about wellness in that moment. Okay, so Nedl is definitely interesting, but I don't want to go anywhere near this as an investment. Frankly, I wouldn't be surprised if they're out of business in the next 3 to 5 years, and I'm going to tell you why. First off, I don't know if I see creators flocking to this platform. I definitely see some niche cases for it, but why wouldn't you just use Twitter Live or TikTok Live or Facebook Live or places that have built-in audiences already and also have visual elements to it to enhance the user experience? Second, because you don't need the actual app to listen to a stream, I feel like people aren't going to download the app, and that is Nedl's most important real estate. Without the app, I feel like Nedl is going to struggle with customer retention. They're going to struggle with introducing people to new broadcasters. They lose out on ad inventory space, and they won't be able to introduce new product offerings to their customers. I get that not requiring the app to listen to these streams is going to help scale the company in the beginning, but I don't know if I'm comfortable with the trade-off of not having the users download the app, because if they don't have the app, they're not really that valuable to Nedl. Next, I want to talk about the AI keyword tech that Nedl is really keen on. It's really cool in theory, but as someone who listens to podcasts quite frequently, I'm really loyal to the people that I listen to. I personally want to listen to people that I trust, not some random person talking about the topic that I'm interested in. For example, I'm really into fantasy football, and so there's this one fantasy football podcast that I listen to. I have listened and tried 10 other different fantasy football podcasts, but I didn't like any of them, and I only like this one fantasy football podcast. And what I'm trying to get at is, this might just be my personal preference, but I think people value the people that they're listening to over the topic itself. And so that is a major hole in Nedl's AI feature. Most importantly, I think that outside of podcasts and streaming audio, so like Spotify, I just don't think that there's enough sustained consumer interest in audio as a format. There's a couple of indicators backing my theory on this. I think Clubhouse is probably the best example. Clubhouse was able to grow extremely quickly, but I think people were joining more so because it was exclusive and cool. Like you needed an invite to get on the platform and whatnot. But since their initial hype, their download numbers and their engagement metrics across the site have dropped off a cliff. We can also look at Alexa. Just a year ago, news publications were claiming that we were going to be living our lives based off of these devices. Scheduling meetings, shopping for products, and everything else was going to be controlled from this device via audio. In reality, most people just use these devices to check the weather and tell them the time. At least, that's what I do. And that's more than just my conjecture. There's reports out there that Alexa skill creation is down drastically, and that just signals that developers are less excited to invest their time and effort into developing in this space. I think that the reason you haven't seen much success outside of streaming audio and podcasts is that people primarily use audio to fill voids, commuting or cleaning the house, things like that. Nedl is positioned more as an active activity where you're real-time looking up broadcasts and you're tuning in and calling into the broadcast show. I think Clubhouse had some similarities, and that's why they struggled, and that's why I'm worried that Nedl is going to struggle as well. And even, let's say, best case scenario that it does catch on, audio is an extremely difficult space to make $1 in. Spotify, one of the top dogs in audio, they have been chugging along for 12 years, and they're finally just starting to scratch around an annual profit. They haven't had one yet. Their main revenue generator that they mentioned is taking a cut of donations given to broadcasters. However, they only take 18% of each dollar after paying creators, the App Store, and payment processors. My final take on Nedl is that I think there's a small chance that they could get bought out for the proprietary keyword AI tech. However, if this doesn't happen, I wouldn't be surprised if they're out of business in the next 5 years. Lots of negative thoughts, negative commentary, but we're just going to plow on. The third and final company that I want to talk about today is the Tula Mic. Tula is raising on Start Engine at a $20 million valuation. And the Tula microphone is a portable, sleek USB microphone and recorder. It's meant to be a lower cost option to the high-end microphones used by musicians and professionals. Creator economy has certainly grown, and I expect this trend to continue, so Tula is definitely benefiting from that. The product itself has good reviews on Amazon, and it's led by a couple of audio execs that have years of experience in the microphone business. So why am I not keen on this investment deal? For me, I just don't see the Tula Mic as a big enough opportunity to be worth an investment. If I'm taking a huge risk in investing in a risky startup, the payoff needs to be more than a 20% return or a 30% return. I'm looking to hit those home runs so that they can make up for the other startups that don't produce. I think a good comparison for the Tula Mic would be GoPro. GoPro was able to go public, but they weren't able to do so until they reached around $1 billion in annual sales. I just don't see the Tula microphone with all the competitors out there reaching that level. And so for me, I don't see an IPO as a realistic exit outcome. And like I said earlier, I also don't see them getting acquired. I think it's much more likely that a bunch of copycat products crop up and compete with the Tula Mic. Lastly, a $20 million valuation doesn't leave enough upside opportunity for me, so it's not worth a risk in my opinion. So that, my friends, is the end to my jaded tirade against these three innocent companies that are just trying to make a buck. Let me know in the comments what you think. Were my takes way off the mark? Were they on the mark? And as always, please like and subscribe to help support this mighty little channel. Peace, y'all.